Hello, everyone. I'm Jacob Stein, and welcome to Allianz series on cross-border M&A transactions. Today, we have Kai Schadbach from Frankfurt in Germany. Kai is of counsel to Allianz, and Kai is likely one of the most experienced M&A attorneys in Germany. Over the past 25 years, Kai has completed over 500 M&A transactions. He does about 30 to 40 deals per year. He is a well-known scholar. He has been an adjunct professor at several universities, and he has himself degrees from a number of universities in Germany, the UK, and the United States. So Kai, we're very grateful and excited to have you today.
Thank you very much.
Thank you. And so we're going to ask you some questions about what it's like to do M&A deals in Germany and what's maybe a little bit different about Germany than other countries. So let me get started. What are Germany's, let's say, 2 to 3 most remarkable business culture aspects to watch for?
Yes. If you want to do a business in a country, obviously you have to watch for the cultural aspects, and the 3 most remarkable aspects in Germany doing business is first, Germans are direct. They are goal-oriented and not relation-oriented. For example, relation-oriented would be maybe some people from the East Asia, or even within German-speaking part, Austrians are more relation-oriented than Germans, so direct and goal-oriented. Second issue is the punctuality and reliability. So be punctual, be reliable. Third issue is that Germans are agenda and structure-oriented. So give your approach an agenda, a transparent agenda, and a clear structure.
Those are all very helpful, actually, and I can personally identify with some of those traits. Perhaps I'm somewhat German myself, unbeknownst to me. Okay, next question. What are some of the more peculiar legal issues in German M&A transactions?
Very specific is in Germany the distinction between the obligatory part of a contract and the in rem part. It's called the abstraction or the separation principle. So a contract divides any transaction by the question if is it an obligatory obligation set out in the contract, or is it a transfer? Is it the in rem part? And if you don't structure the wording carefully enough, then you will not have legal clarity, and there will be a mistake. Second example is the wide range of retention of title in Germany. There are various sorts of possibilities to retain your title before the good or the share has not been paid for. And the third aspect is more and more over the time the US style of transaction documentation. So you have also in Germany, like in the States, very specific contracts, very lengthy contracts, because you have to deviate from the statute. The statute is not made for transfer of companies, and therefore you have to write a lot just to set aside and deviate from the statute, and you write your own contract, you write your own statute, if you like, among the parties.
Oh, interesting. Okay. That's fascinating and helpful. Okay, moving on, Kai. What are some clauses in the deal documents in Germany, and you can pick any sort of an agreement you like as a case study, that significantly deviate from the way M&A documents are done, agreements are done in other countries?
From the 3 examples, first one is the determination of the purchase price for the shares for the company you buy. In Germany, we have more the locked box concept versus the closing account or completion account mechanism like in the States. What does it mean? A lockbox means you base your purchase price on the financial statements, mostly the financial statements of the last year. And the benefit is that it provides certainty for all parties, mainly for the seller, that the purchase price is already clear. Versus the closing account, more the US approach. The closing account mechanism is that you calculate the enterprise value based on definitions set out in the SPA, in the share purchase agreement. In the second step, you deduct actual net financial debt at closing. These are cashless financial debt in the closing accounts, and add the difference between the current and the reference working capital to arrive finally at the cash and debt-free purchase price. So a little bit more complicated, it takes more time, and it's better for the buyer because then he does not experience surprises many months after the last financial statements when the deal is done. Second example are the specific deviations you have to make from consequences of a partnership. If among shareholders there's a partnership or you transfer a partnership, then there are various specific rules. To give you just one example, if one partner dies or gets bankrupt, then the whole partnership will usually be seized if there is no provision in the partnership agreement. And that surprises a lot of foreign lawyers. And third and last example are the specific notary costs in Germany, which are quite high. The notary requirements are quite rigid. And that, of course, calls for a lot of creativity to avoid them. And so you have some notary cost saving clauses so go to an experienced M&A lawyer and he can help you to save a lot of money with notary costs.
We've run into a lot of notary issues in Germany and some other European countries, and yes, it can be very very expensive and very demanding dealing with notaries. Okay, moving on. What are some issues that a foreign buyer should consider if they're buying a company in Germany?
Yeah. To structure a deal in a way, for example, to save notary costs. And for example, if you have an asset deal, usually you don't have to go to a notary, which can lead to 50 or 100,000 euros just for notarization for a few hours. There are specific clauses you can avoid this. Second issue are the FDI, foreign direct investment aspects, and the foreign subsidiary regulation, which came into effect just a few months ago from the European Commission. That in these cases, if a foreign purchaser wants to enter Germany and wants to buy German company shares, he has to sometimes undergo the foreign investment regulations and foreign subsidiary regulations, which can take several months, which you need either to find a way to avoid it or at least to calculate it within your timeline. And the last example is some formalities, for example, proof of authorizations and apostille requirements. Or if you do not come from a company which is a party to the apostille convention, like in China, you don't have the possibility of apostille, so it gets even more difficult and time consuming, or for KYC or anti-money laundering requirements and transparency aspects, which has also to be considered.
Interesting. Every country is different. Okay, so a final question, if you have time. What are some maybe non-legal tips you would have to get the deal done successfully in Germany?
Yeah. First, never use any tricks that destroy trust, because trust is the most important aspect to bring the parties together. So be honest and walk your talk. Walk your talk, talk your walk. And second example, do not renegotiate. there are certain issues, if they have been negotiated, even if you didn't enter it into a binding contract, do not renegotiate it. Maybe there are certain extraordinary circumstances, but usually do not renegotiate important aspects. And last example, stick to your time plan. We remember the reliability and punctuality of Germans. So stick to your time, to your plan, to your structure. Of course, nevertheless, in the transaction, which is a multi-step procedure, nevertheless, you have to be flexible for reasons, but for reasons.
Kai, it sounds like you really know how to do an M&A transaction, and I can see the experience that you have and all the knowledge you have. Thank you for sharing some of that with us today. It's been illuminating, and we love having you here.
Thank you very much.
Thank you for joining, everyone.